The JSE All Share Index is trading slightly above the 73,700 level, the sixth straight session of gains, mainly supported by tech stocks. Market sentiment is mainly boosted by signs that China could further relax its COVID restrictions after weekend protests and more economic stimulus. Makwe Masilela is the Chief Investment Officer and founder at Makwe Fund Managers. He joins us now for the latest market moves. A very good afternoon to you, and thank you very much for joining us. So the Statistician General, Maluleka, speaking to my colleague Ndogozo Mazibuga a little bit earlier on, said, and I quote, "Our job is to never be discouraged or encouraged by numbers." With the rand firming against the US dollars, would it seem that the markets are encouraged by the latest statistics on unemployment?
Definitely, the rand managed to get some lift from that. I mean, a 1% improvement is a quite significant improvement. But what has been driving the rand mainly is the fact that we see more of a risk on trade, with the hopes that the likes of China will start opening up. And should that happen, that it means the Chinese economy will grow. And we know that these are the guys who've got a huge demand when it comes to our commodities. Hence, we see commodity prices also going up. And bearing in mind that the rand itself is a commodity currency, so the rand has also been benefiting from the fact that commodity prices are going up. And also, we've seen that the dollar itself, for the fact that it's more of a risk on trade, people don't have to rush to the likes of the dollar for safe haven's sake. So the dollar has been going down a little bit as well. That benefited the rand.
Let's get into the quarterly labor force survey for the third quarter. The official unemployment rate decreasing to 32.9% in the third quarter of this year, rather. What stood out for you with the statement?
I think it was expected in the sense that, yes, we know there have been issues when it comes to the likes of load shedding. The most important thing is that, remember, Q3, that's when people are building up for Q4, where usually you've got a huge demand. And other people, they know that when it comes to Q4, we look at the month of December, it tends to be a very short month. So whereas in construction, stuff like that, people will try to catch up as much as they can so that when they close, they know that they've covered a lot of work. So usually we see a nice pickup when it comes to Q3. Hence, the manufacturing and construction continue to do well. It was kind of disappointing to see the likes of finance losing almost 80,000 jobs. That's quite significant. And also when you look into our extended definition of unemployment, also it improved by 8% to 43. So that's also kind of encouraging. The problem here is going forward, will we be able to sustain those numbers given that our economy is struggling, and let alone the fact that load shedding will still be here with us for quite some time. And I think up until we get the structural reforms implemented, then definitely maybe that's when one can start seeing an uptick when it comes to unemployment. And we are happy that it is almost a third quarter in a row that we've been seeing this kind of improvement when it comes to our unemployment. But yeah, we could do better than this.
So African Bank Holdings has reported an improvement in its after-tax profit, the group's net profit jumping 38%. Help us make sense of that.
It was kind of expected, especially if you look at their retail loan disbursement increasing by 87%. Remember, the guys, number one, they had to play cash up. Number two, the guys, when it comes to the criteria, the provision thereof, they had to realign their policies with the industry practice. And we know that during COVID, they were more strict, but now with things being a little bit softer, they had to relax some of those rules. But it's happening at a time where where interest rates are going up. So I'm not sure whether it's something that they should be happy about, because in the long run, those loan advances might turn out to be bad loans going forward. We hope it doesn't happen. And also, when you look into their retail, their retail service investment, it was impressive, increasing by 15%. And now we know, as much as competition is very serious, unfortunately, it's happening at a time where there's huge interest rate increases, inflation is high, people are struggling. So yes, are they the good set of numbers? Definitely they are.
South Africa's private sector credit rose by 9.34% year-on-year in October, slowing from the previous month. Why?
I think it was expected. Remember, when it comes to credit, you can only ask for credit up until a certain point, depending on your needs and affordability. So you cannot forever be asking for credit. And also now it gets to a point where people who know their salaries are not enough, they have to go and tap into some unsecured credit loans, stuff like that, to be able to survive. So these elevated levels, are they here to stay? Chances are they won't, because now you get to a point where people, whether it's from the US or the European Central Bank and even our Reserve Bank, they're still continuing to say they have to fight inflation, and we know they're using only interest rates to be able to do that. So meaning affordability will continue to be a real issue, and unfortunately we might start having some serious bad debts. But these elevated levels, yeah, it's all well and good, because people are asking for credit to spend on things that will help the economy to grow going forward.
CEO and founder of Makwe Fund Managers, Makwe Masilela. Thank you, sir.